We're here in Monte Carlo for the Rendezvous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by Laurent Rousseau, who's Chief Executive of EMEA and Global Capital Solutions at Guy Carpenter. Laurent, welcome.
Thank you, Richard. Good morning.
So congratulations on the new role. Tell us a little bit about how that's going.
Look, I mean, it's already 15 months ago, so it's a while back. Being back in London is great. It's really a city I love, and it's a very vibrant marketplace. So it's a lot of good fun being back in the market. It's a very interesting time. Our clients need us. There is a lot of movement in the market. And being part of a leading franchise like Marsh McLennan and Guy Carpenter is very exciting.
So, Laurent, you've experienced Monte Carlo as both a reinsurer and a broker. Tell us about some of the differences in the experience.
Before being a reinsurer, I was an investment banker. And so being in an advisory role is not new to me. So I think a few points coming from that, 3 points. The first one is client advocacy. The alignment of interest between the broker and the insured is 100%. As a reinsurer, clients are, of course, very important, but here the alignment of interest is not 100%. The second point is, and having been a banker in my prior life, is to be able to see the global market of capital. There are pools of capital and pools of risk. Some of these capital pools are traditional capital, reinsurers, but the financial markets, the alternative asset managers, is a big part of our industry. And having that financial mindset is very important as well. And third, we are the custodians of our clients' interests. We have that fiduciary duty, and it comes first. We have as well to advise them on the general equilibrium. What I mean by that is it's kind of, fighting too hard and missing the bigger picture, missing where the market will settle is no good for the clients either. And so trying to find that right balance, I think, is at the heart of what a broker should do. And I think this is what has been a distinctive feature of Guy Carpenter, of having this global view, technical view, and both sides of the equations in mind.
So we're in what generally regarded as a hard market. The role of a broker in a hard market is different from a reinsurer. Tell us a little bit about some of the opportunities and challenges that you see.
Look, we're in a cyclical industry, and so there is a bit of a pendulum. There are cycles, and the cycles are not static. They're not hard or soft. They're hardening or softening, and they are doing so in different places. Sometimes different parts are softening while others are hardening. So I think we need to look past a little bit this kind of static descriptions, I would say. There's a lot of focus on pricing, and people think that it's the price is whoever screams the loudest. Is it the broker kind of screaming loudest, or the grumpy risk taker saying, what about the price of risk? Let's go back to basics. Price equilibrium is a function of offer and demand. So looking at how much offer increases, and that offer increases more than demand, should lead naturally to prices being more competitive. So that's going to be one area of discussion. And that's more along the softening angle than the hardening angle. Now, does that mean that the market is going to collapse? Does it mean that underwriting discipline is going to collapse? Of course not. If you look at the claims activity for insurers, the claims activity as well for reinsurers to some extent is still pretty high. So there's going to be discipline in the market. But there has to be some kind of a balance to be found. And given the way where the stages and the evolution of the cycle, I would expect it to be more favorable to insurers, very much so.
So supply and demand is more than just about price, though. Are reinsurers providing the products that insurers are looking for?
Look, reinsurers have been paying claims. The market has been functioning there. I think if you look back at the big events in the past few years, they've probably taken the Ukraine war, Baltimore Bridge has been pegged very high up. In the end, we tend to see claims coming in a bit lower. So there's been, claims have been probably on average developed lower than initially expected, and reinsurers have been there to deliver on their claims promise. So I think this has been working well. Another part of the market that has worked well is the cat bonds market, where here, financial investors have been in that space for over 15 years. Cat bonds have been working. They function very well and at the right place in the towers. So I think that part has been working well. Now, the current state of the market is interesting because we're at this point where actually insurers are suffering more than reinsurers, which was not the case a couple of years ago. And so that's going to be that balance, and this is really what's going to happen in the next few days, of insurers asking for a bit more of sharing the fortunes, which is one of the core principles of our industry. And how do you do that while everyone meeting their own function? So reinsurers taking perhaps more volatility, but what about frequency? Today, second repairs are a key question. Reinsurers can't just stand on the line, and they haven't been picking up so much of it so far. So I think, by and large, the reinsurance industry has been resilient, has worked very well. There's been a good balance in the market. There was a bit of a rupture in 2022, early 2023. Now the bid-ask gap is closing down. Expectations are more aligned, but there's going to be, a rebalancing to be done, that's for sure.
So a lot of the talk here in Monte Carlo is around the challenges facing North America and the exposures around North America. Tell us a little bit about the rest of the world and how that can influence the reinsurance market.
First of all, in our industry, we quite like a cozy environment, and beware of the tail wagging the dog effect. So we're part of a macroeconomy. We're part of an insurance industry which has been actually going through pretty deep transformation. If you look at the life side, the way interest rates have evolved, the way owners, so alternative asset managers, the life insurers have been tremendously challenged. So the whole macro environment has been impacting not just North American, but the industry at large. So we can look at, European themes, but we are in a global industry and with a lot of interconnectivity. If you look at European risks to your question, first of all, I would say macroeconomic and geopolitical uncertainties are very high. Not just on the elections point of view, but SRCC is going to be, and political stability is going to be a major point. Maybe not too dissimilar to North America, to your question, but there is clearly a European theme there. We've seen it in the UK, we've seen it in France. So that's one area. On the natural catastrophes, we are still in Europe living the consequences of what's happened in Turkey, earthquake, in Morocco, which are at the periphery or neighboring Europe. But the question of quake covers and how natural catastrophes remain a key question in Italy, in Greece, in Portugal, is very much there on people's mind as well. And last but not least, European insurers have always been known for having perhaps a more kind of across-the-board approach to relationship with their reinsurers and being a bit less line of business driven, which means that the type of discussions that happen with European insurers is a bit different. The question of the partnership across lines of business is clearly higher up. That means as well that it is a bit more of a compensation game. And so today there is a lot of appetite for US CAT. European CAT has not responded as much as some of the other regions' CAT. And so how do we get the European risks to nonetheless meet pricing requirements and reinsurers' appetite? We're going to have to find a right balance in there.
Some conversations to be had over the next few days. Laurent, thank you very much indeed for joining us.
Thank you.
For Invest TV, I'm Richard Banks.